Good morning and welcome to the Killik & Co market update. This week we've had the FTSE 100 quarterly reshuffle being announced. The FTSE 100 contains the 100 largest companies in the UK by market capitalisation. And clearly market capitalisation is changing all the time as share prices change. So every quarter the FTSE 100 has to be rebalanced to make sure that it really does contain the 100 largest companies. This quarter we've only got two changes, one company leaving and one joining. And that in itself is quite notable. It really shows that markets have stabilised since the early part of this year. If we go back to June, when that FTSE quarterly reshuffle happened, we had 8 changes, 4 companies joining and 4 leaving. And that really showed just how much market volatility we had experienced in the early part of this year. So this time around, who's leaving and who's joining the index? The company leaving is HomeServe, which is an emergency home repairs and DIY business. And the company joining is Pershing Square Holdings, which is the investment company managed by Bill Ackman, the New York hedge fund manager. He's quite well known for his bets on Herbalife and Valiant Pharmaceuticals, and actually there have been quite a few Netflix documentaries about him. But his New York hedge fund has done very well over the last 2 years, and that's why the company is now joining the FTSE 100 index. Let's go back to HomeServe because I want to have a look at the chart for this one. HomeServe, as I said, is a DIY company, and it did really well in the early parts of lockdown because of that DIY craze that happened. And actually, the company only joined the FTSE 100 in June of this year. However, now that there's a vaccine on the way, it's expected that some of these trends that have happened in lockdown, such as DIY, will start to die down. And therefore, the benefit that companies like HomeServe have experienced will also start to die down. So take a look at this chart here. As you can see, there's a really notable drop in the share price of HomeServe on the very day that that vaccine announcement first came out. Now, this pandemic is likely to cause some permanent changes to how we live and work. And that's likely to benefit some companies on an ongoing basis. But for other companies, the benefit they've experienced during lockdown is expected to be temporary. And based on this share price chart here, it looks as though investors think that HomeServe is one of those companies. Also this week, Salesforce has announced that it is to buy Slack for $27.7 billion. And to put into context what a large acquisition this is, a market capitalisation of just £4 billion would put you into the FTSE 100 index. Salesforce itself is currently worth over $200 billion. Salesforce is a leader in cloud-based software with a particular focus on CRM or customer relationship management, and Slack is a messaging tool and collaborative working tool that currently competes with Microsoft Teams. Over the course of the various lockdowns that we've had, there has been a huge increase in demand for cloud-based software as more and more people have started working from home. And the size of this acquisition that Salesforce is making very much shows that Salesforce expects this demand for cloud-based software to continue. And finally, last week it was announced that RPI, or the Retail Price Index, will no longer be used as a measure of inflation from the year 2030. At the moment, there are 3 commonly used measures of inflation. One is RPI, which is the oldest measure, and which does include some measure of housing costs. We've then got CPI, or the Consumer Price Index, which is the current preferred measure of inflation. And then we've got CPIH, which is a version of CPI, but with housing costs included. The methodology for calculating RPI versus CPI is very different, and it's thought that RPI is less accurate and that it shows an artificially high level of annual price increases. Here's a chart showing the 3 measures over the last 30 years. So we've got RPI in the green, and as you can see, it is consistently higher than CPI. It's generally thought to be about 1% higher per year. So from the year 2030, this measure will no longer be used. So what is the impact of this? Well, the benefit to consumers could actually be fairly high. For example, train fares have previously been raised by the rate of RPI every year. So if CPI is now to be used instead, then consumers will have to suffer a smaller annual price rise. However, some pensioners could lose out. Some people have final salary pension schemes that were previously linked to RPI. And if they are now to be linked to CPI, then the annual rise in income payments will be smaller. It's also true that some government bonds in issue are linked to RPI, so the annual interest payments would rise by the value of RPI every year. If that's no longer going to happen from the year 2030, then it makes those bonds less attractive. And therefore, since this announcement came out, we have seen falls in prices of those particular bonds, and the government has said it's not going to be offering any compensation for that. A number of pension funds do hold these bonds, and therefore they have suffered the falls in prices, and it's possible that some companies could suffer deficits in their pensions as a result. Moving on to have a look at next week, it's incredibly quiet on the corporate calendar, and we have not got results out from any companies that are covered by the Killik & Co research team. However, there are results due out from hub company Marston's and from cardboard packaging company DS Smith. That's it from us. Enjoy the weekend, and we'll see you next Friday.